All right. Matt, the mortgage guy. In today's video, I'm going to talk about how the Fed, after the Fed funds rate got hiked up by 0.75%, actually caused mortgage rates to come down. You heard that right. Fed raised interest rates, mortgage interest rates came down. Stay tuned. I'll break it down quite simply. All right, Matt, the mortgage guy, residential mortgage broker, powered by You Mortgage. In today's video, I just want to keep it really simple and straightforward. I'm going to jump right into it. Everybody was talking about the Fed is going to increase interest rates. A lot of talk, because I'm hearing that this was going to affect mortgage rates and mortgage rates were going up. Simply not the truth. And I could have told you that before the meeting. But now that the meeting has passed and we've had a couple days for the market to digest, we see that mortgage rates have not only come down, they've come down rather significantly. You might be asking yourself, why is that? Well, let me set the table first. The Fed, which meets 8 times a year and discusses monetary policy, and they move the federal funds rate up or down. That federal funds rate is the rate in which banks lend to each other on an overnight basis. Doesn't directly tie to the 30-year fixed rate mortgage, but it does have an effect on it. The issue with July meeting and now September meeting and the future meetings and why you're not going to see it moving in the same direction is because all these Fed rate hikes have already been written. They've already been talked about. So the market already has that baked in. Mortgage rates, as of months ago, could see the dot plot from the Fed, could see that the Fed was planning on raising the Fed funds rate in June, July, and September. And so when they go out and do it, it's no surprise. That's not going to have upward pressure on mortgage interest rates. What will have either upward pressure or, like in this case, downward pressure on mortgage rates is what the Fed says, what they talk about future policy, what they plan to do. And in the July meeting, what the Fed said that had the biggest impact on pulling rates down is around their plans to start easing off this increase and even backtracking, right? And starting to cut rates. They're not going to do it in the September meeting, and they're not going to do it more than likely in 2022, but they've literally laid out the plan. They've seen demand pull back quite a bit from all the work they've already done. They expect it to pull down inflation, which it should, right? Because that one was the purpose. And as they're making it more expensive to lend across all sectors, it's going to rein in demand and rein in inflation. So with all that being said, mortgage rate sheets last week saw a great decline. If you go to Mortgage News Daily, it's a great third-party site where they're not going to collect information from you. You can just see what a national average is, right? Back in June, that national average on a 30-year fix got all the way up to 6.28. Thursday, I believe it was 5.22%. Friday, it was 5.13% after hovering around 5.5 pre-Fed meeting. So as you can see, rates have come down quite a bit. If you want to get a rate in the 4s, you just got to call a local mortgage broker and not an intent to lend, not an offer to lend, NMLS number 10883, all that stuff. I'm not going to quote specific rates except for tell you to go to greatmortgagebroker.com, get yourself pre-approved, and a great mortgage broker will take care of you. So what to expect in the future, because I get this question quite often, is what does this mean? What's going to happen? The Fed has talked about it, and we've monitored it. If this monetary policy that is making things more expensive, that is quelling demand, helps push us over the edge into recession, the Fed is going to reverse course and lower interest rates in order to make sure that the recession is not too deep or nasty, right? Beginning of the pandemic, when the Fed lowered the Fed funds rate to near zero, money was literally free for businesses, for anybody who was borrowing money across a bunch of different things. That spurs the economy. That's helpful for business and for the economy as a whole. And so the Fed has already hinted at it. We've already heard about they're doing what they're doing now, quell inflation, pull back demand. As we head into a recession, they're going to come the opposite way. After that Fed funds rate gets up into the mid threes, the pullback will begin. And that pullback will have a positive effect on interest rates. So anybody who asks me to predict the future of interest rates, I don't know. Nobody knows. There's a bunch of economic things that can happen between now, depending on what the inflation readings come out at, depending on, geopolitical things. A lot of stuff goes into how mortgage rates are priced. But I think there's a good possibility, especially if inflation starts to come down, like the Fed expects, especially if they stick to the plan that they've set, we might have seen the worst as far as interest rates go on mortgages behind us. That 6.28 we saw in June might be the highest we see this year. Other folks that are predicting 7, 8, 10%, I just don't see it. If you were to ask me to peg what I believe is going to happen, I think that this 5% range that we're in now, call it 4.5 to 5.5, might be the range we stay in for the remainder of 2022. Obviously, future meetings, future decisions, future talk about what the Fed does, if they shift, if they pivot, if they do things different, that could affect this. But if they stay the course, which they've been pretty vanilla and pretty stay the course type of Fed so far, I believe we stay between 4.5 and 5.5. Next year, especially if they stay the course and start to pull back and they start to cut the federal funds rate, we should see mortgage interest rates come down. I've told people that sub 4% is in the cards, in my opinion, come next summer. So what does that mean for you as a home buyer? What does that mean for you as an investor? Right now, Q3, Q4 of 2022, it's easier than it's been in a long time to get your offer accepted. It's easier than it's been in a long time to get seller credit, to either cover your closing costs or pay down your interest rate, or a little of both. It's better than it's been in a long time to make sure you have your contingencies in place. You don't have to waive that stuff. You don't have to offer above appraised value. All the great things that you want as a buyer when it comes to leverage. Most every market is starting to see this turn, is starting to see buyers gain more and more leverage. That will continue. I don't see a crash of 30 or 40%, and people will fight me on that. I just don't see it because there's enough underlying demand, and there's also very short supply. I don't see, even in markets that have seen big upticks in inventory, it's not because there's a ton of new listings hitting the market. It's not because the market is being flooded with listings. It's because the listings that do get listed that compare to the last few years' averages and they're right on pace don't sell as fast. So inventory piles up a little bit. So we'll likely continue to see that. If you're a buyer, if you're an investor, keep your eyes open, look for opportunity, make sure that you have all your ducks in a row when it comes to financing, make sure you know your numbers. As an investor, what cash on cash return number you're looking for. As a home buyer, especially a first-time home buyer, have a really clear picture of what your budget is, how much you spend every month, how much you can allocate to housing, how much you have in a reserve emergency fund, and how much you're going to allocate for things that might happen as a homeowner. Hot water heater might break. AC unit might need to be replaced 3 years from now. Have some funds set aside for that. Do it the right way. Make sure that you're fully pre-approved, you're ready to roll, and you know your numbers. Again, greatmortgagebroker.com. If you want to reach out to me and my team, we're more than happy to help. Hopefully this helps you. I don't have a crystal ball, but that's my 2 cents. Thanks for watching. Check out Get Better Every Day podcast on Apple Podcasts and Spotify. Just launched that one a few weeks ago. I'm having great guests on there talking about getting better every day. Thanks for watching. Until next time, we gonna see.